Hey everyone, and welcome back to the channel. Today, we are pulling out the crystal ball and taking a deep dive into what we could potentially expect from the markets in 2026. Now, remember, this is all based on our analysis and forward-looking perspective. Things can change, so always do your own research. But based on what we're seeing, 2026 is shaping up to be what we're calling a sandwich year. Stick with me, and I'll explain exactly what that means and how you might be able to navigate it. So, what is a sandwich year? Imagine two strong quarters on the outside, like two slices of bread, with two weaker, more volatile quarters squished in the middle. That's the picture we're repainting for 2026. It's a year of two distinct halves, presenting both challenges and exciting opportunities for savvy investors. Let's break it down, starting with the first quarter. We're anticipating a strong start to the year. Q1 looks like it could be an up quarter, carrying momentum from the end of 2025. You might see positive headlines, strong market performance, and a general feeling of optimism. During this period of strength, our strategy is to be prudent. Instead of getting carried away by the hype, we plan to trim some of our positions. This means selling into that strength, taking some profits off the table from our biggest winners. It's about locking in gains and building up a cash reserve for what comes next. It's not about selling everything, but about rebalancing and managing risk when the market is feeling generous. Now, let's talk about the middle of the sandwich. Q2 and Q3. This is where things get interesting. We foresee a shift in market sentiment heading into the second quarter. We're expecting a down quarter, a period of pullback or correction. This is the weakness we've been preparing for. When others might be panicking, our plan is to see this as a buying opportunity. That cash we built up in Q1, this is where we start to deploy it. We'll be looking for quality companies whose stock prices have been unfairly beaten down by the broader market downturn. It's about being greedy when others are fearful, but in a calculated, strategic way. This downward or sideways trend could continue into the third quarter. Q3 might be a bit choppy, moving down to sideways without a clear direction. Depending on where prices are at this point, our strategy is to continue buying. If the market offers us even better prices on the companies we love, we'll buy more. If the market starts to find a bottom and trades sideways, we'll continue to accumulate positions patiently. This middle of the year is all about building our core holdings at discounted prices. It requires patience and a strong stomach, but this is often where long-term wealth is built. Then, we get to the final slice of the sandwich, the fourth quarter. After the turbulence of the middle of the year, we're expecting the market to find its footing and rally again into the year-end. Q4 looks like it could be another up quarter, driven by a potential recovery in sentiment and maybe some positive economic data. The positions we carefully built during the Q2 and Q3 downturn could start to pay off handsomely as the market begins its ascent. This end-of-year rally would complete our sandwich year structure: a strong start, a weak middle, and a strong finish. So to recap our 2026 playbook, in Q1, we trim into strength. In Q2 and Q3, we buy the weakness and accumulate. And in Q4, we hopefully ride the wave of the next upswing. It's a dynamic strategy for a dynamic year. It's about being proactive, not reactive. Of course, this is just our high-level outlook. We'll be watching the data closely and will adjust as needed. The key is to have a plan and the discipline to stick to it. What do you think about this sandwich year thesis for 2026? Does it line up with your expectations? Let me know your thoughts in the comments below. I'd love to hear your perspective. And if you found this breakdown helpful, please give this video a thumbs up and make sure you resubscribed so you don't miss our future updates. Thanks for watching, and I'll see you in the next one.